Hey traders, welcome to the top tier outlook for the week of September 9th. We're taking a look at what we've got going on here as we've dealt with what seems to be, right, very much on par for what September usually brings, which is a lot of weakness. But before we say the indices are our whole world, we want to acknowledge that there is quite a bit of weakness there, but not in all places proportionately. When we take a look at the markets, right, what are we really talking about? Indices, sectors, treasuries, currencies, energies, metals. We want to be very specific about where the strength is and isn't right now. So let's take a look at an early peek at the Sunday open, which by no means means we're going to see this, 9:30 tomorrow morning. But for now, it does seem that the weakness that we saw on Friday hasn't triggered sort of a panic gap down for the Asian Open. And that's at least a first step for those of us, not looking for an uptrend, but just looking for where the support, the resistance, the range ultimately is going to be. Let's go take a look at the NASDAQ. Same situation there. Big sell-off. The reason I kind of like this NASDAQ sell-off, maybe in a way that's a little bit more useful than the S&P, is the proximity the NASDAQ has to what's known as the top tier dots. So imagine if you had moving averages that were looking at not just a simple moving average or an exponential, which quite frankly, it's 6 of one, half dozen the other. Use whichever you'd like. But the extra thing that I look at with the white dots you see, the top tier dots, is we're looking at participation. And we're also looking at the criteria under which those white dots would even appear. So let's say, separate from a moving average, what do we want from any indicator? Of course, we want some sort of support, resistance, signal, overbought, oversold. Also, what we really like is our indicators to say, hey, I've got nothing to say about this current environment. Wouldn't that be great when an indicator says, this is not the best club for the shot? And that's what propulsion does. Is say, look, in a certain environment, those white dots are going to be very good support. You can see back here on the 5th, and we had that carry unwind yen crisis move. The white dots were absolutely respected on the 5th, and then they disappeared and said, you know what? We have nothing to say about the current environment. And they turned back on the 22nd of August, and they're still on as we're going into next week. Looking for support in around that area is going to be key, and I'll continue to look for that on the NASDAQ. And then that means I'm going to think about the 4 sectors that are in the NASDAQ. It's going to be important for things like XLK to find support into tomorrow's session. Also, XLY want to find support into tomorrow's session. Now, you might see, Rag, why does XLY look so different than XLK? Well, this is the difference between technology and consumer discretionary. They're not the same group of stocks. Again, heaviness in the broader averages are going to impact the sectors in a different way depending upon the stocks that are weighted within them. So what is XLK? It's Microsoft, Nvidia, Apple. What's the XLY? It's Amazon, Tesla, Home Depot. One of the reasons the XLY sold off and looked so ugly on Friday was basically and almost single-handedly because of Tesla. And, if you've been watching this show for any period of time, you know that I always tell traders, if you are, this is the way that I look at it, tell myself this, if I'm looking at Tesla, it's got to be because there is a narrative that is driving it, because it tends to do its own thing, separate from the S&P and the NASDAQ. And it's been very bearish since August 1st, and it continues to be pretty darn bearish now, taking back, as you can see, the rally on the 4th and on the 5th. All right, so that is what we had on Friday. And again, looking at XLY being driven down really by one name made it a pretty interesting place to get long. So, all my cards on the table, I'm long calls in XLY. Not so much in the NASDAQ, although we'll keep an eye on that, and certainly not in tech. What about semiconductors? Semiconductors have been pretty darn heavy as well. And this is where, whether it's NVIDIA or Taiwan Semi, we really need to be very patient about what's happening here. In fact, semiconductors and XLK are more linked than ever. And this is where, careful what you wish for, right? A lot of traders in the XLK said, look, we want more NVIDIA exposure. And so what they did was they swapped Apple and NVIDIA's weighting. But here's the problem. Now, instead of, say, 20% Microsoft, 20% Apple, and about 5% NVIDIA, it's 20% Microsoft, 20% NVIDIA, and 5% Apple. And, lo and behold, Apple's actually holding up a whole lot better than NVIDIA is. So isn't that just the way, right? So XLK, they reshuffle their weighting, and probably not for the best at the moment. It's disproportionately weighted in NVIDIA, the way semiconductors are, the way SMH, the ETF is. All right, so with that being said, let's see what else we have here. The Bears want. I'll tell you what, gang. This season won't be watching any football. I know, no football analogies, no football stories from this. I've actually decided to try to get back roughly the 12 hours, sometimes 16 to 20 hours a week that I was watching football. And so, I'm going to do some different stuff. And consequently, what I've been doing a lot more of, I've been actually eliminating a lot of sportsing from my life. And what had opened up over summer, I did not take F1 off. That's my guilty pleasure. But what we've been doing instead is kind of diving into retweaking and re-examining a lot of indicators, going back and looking at how I could trade SPX. So it's freed up a lot of time. And I have to say, it's been a lot better in terms of net return on my trading, claiming those 20 hours back a week. So did they win? I'm happy for the Bears. Mark, I did catch an episode of Hard Knocks. I did catch some Hard Knocks, the HBO series, and it's been really good. I've been enjoying that. So that's kind of replaced my sportsing. All right. So what's going on here with oil? It's heading lower. I have not been really all that interested in oil or oil services or oil or energy. I've been leaving the oil narrative alone. And there's a good reason why. If there's anything to do in oil, or frankly, most of those sectors that I just mentioned, it's going to be likely to the long put, the short side in this environment where we're dominated by red candles. A few neutral ones here and there. But if anything, I can, and I really, frankly, maybe should be a little bit more aggressive on the long put side of maybe crude oil, USO, OIH, XLE, XOP, and those weaker names within them. I've been focusing mostly on the long side of the strength names, whether that be staples, utilities, XLY, GDX, gold. I've been a little bit more bullish in those places. But yeah, if there's anything that I may not be as aggressive on right now are some of the energy plays. But yeah, they're definitely ripe for, we have buy the dip. Well, the other side of that is short the rip. And I'd say anytime we're looking at a rip in crude, probably a pretty good time to look at long puts there, especially on the daily time frame. All right. And then if oil is weak, then the different stocks that move with oil, those ETFs, the same way that when I'm long gold, I look at GDX, those companies I'm going to be also pretty bearish on for now as well. And again, when I say bearish, remember that I think one of the most important things that is oftentimes lacking, and I try not to be guilty of this myself, but one of the most important things lacking in any analysis about any symbol is what's the time frame and what's the time horizon. Now, obviously, this is a visual show. You can see that I'm looking at mostly the daily time frame for our conversations with the 5-minute on the left because we just got the open. But for the most part, if I'm looking at a daily time frame, I don't know where this is going to be in December. This is not about where will we be at the end of the year or November or frankly, even October for that matter. A daily time frame is typically going to map out a trade with about a 2 to 10 day time horizon. And, when we think about what we do as traders, is what I do as a trader, is what you do as a trader about where we're going to be in March of 2025? Is it going to be about guessing at where we're going to close at the end of the year, or even frankly, the end of this month? And I propose the answer is no. A lot of the conversations that are taking place, especially on television, have no merit in your and my world, because we're either day trading, where it's about today, or short-term swing trading, where it's usually about this week, or it's maybe a long-term swing trade where it's really mostly about the next 2 to 10 days, maybe the next 2 weeks max, or whenever the expiration is for that option. So whenever we're taking a look at the daily, know that's what my time horizon is. Know that I could care less where we'll be in October or November. And frankly, not only could I care less, it doesn't matter to our trade. That's the funny thing. A lot of the things that traders tend to talk about, recession. I mean, frankly, if we're looking at trades, are you an economist? I know I'm not, right? None of us are. And so I love the question, say, about oil, as long as we keep the time horizon of what's happening right now, not that in 6 months OPEC might do this, or in 3 months this is happening. Unless we change the time frame, there's no sense in that. So you might say, okay, Rog, I get it. Short-term time frame. What about a weekly time frame? That's where we get that longer multi-month type outlook, that multi-month time horizon. And if you want to do something shorter, like what I've been testing on the SPX, I'm just looking at things that I can do by 10:55, usually a.m. Eastern, to maybe the close, maybe, right? So it's a very short today time frame. And if we get, or time horizons, if we get the time horizon right, life becomes a whole lot easier, because we don't get caught up in conversations that have nothing to do with our trades, right? So that's always been a tricky part of the game that we play, which is the conversations that are happening aren't necessarily the meaningful ones, right? And yet, 24-hour cable has to talk about something, right? So they're just going to keep the information going, regardless of the fact that most of these financial stations are for investors, and yet they talk about short-term trading, which is kind of one of the more hilarious aspects of what goes on television. At what level would I buy back into gold? It's nowhere near right now, but Pat, I'd probably look at the 2505 area and my daily price movement range, depending on the day. Remember that the daily price movement range is something that is going to be updated every day, and by design. The job of the daily price, what happened to my image there? There we go. The job of the daily price movement range is to adapt to the volatility, and to do that session by session. So I'll have a different daily price movement range gray zone every day by design. But the static level that I'm probably most interested in would be right there around 2505, 2506. What about Kava? So Kava is going to be one of those names that has been a popular name, but it's not. So CAVA is not really weighted in the S&P, NASDAQ, Dow, Russell in a meaningful way necessarily, but it has been pretty strong. I haven't really kept an eye on this one. I would say be bullish, but maybe look for a gap close. There's two levels you can look at. Either the gap support of the open on August 23, or the close of August 22. Either you're going to find support in that area around 110.20 or down to about 103.5. So I would wait for a little bit of movement to one of those two support levels and then look to the upside. But for me, when I'm looking at something like CAVA, I'm always going to ask myself, where is it weighted? What is it moving with? And is that something where it's going to move, by itself, because it's really not weighted in other major averages, or is it something that's going to have sensitivity to other names? So really, when you take a look at CAVA, it's mostly small cap. And I'm trying to think of where it has weighting in a meaningful way in a major sector. I cannot think of one. So remember, it's probably going to do its own thing, which is not a bad thing, right? If you're saying to yourself, look, I want something that's going to move higher despite what's happening in the broader averages, things like CAVA could very much be part of that. Next question is, Srinivasa asked, what are those white dots in your daily chart? And as a long-term investor, how do you use those charts? Srinivasa, check out the replay, because I talked about that right on the onset of our time here, but it is a way that I look for support and resistance, and it's really just a tool that allows me to do something additional, which is, I did not mention this before, is look at something whether it's on the bullish side of sentiment or on the bearish. So the example of Kava, this is very much on the bullish side of sentiment. And if I want to be a longer term trader or a longer term investor, I would prefer that whatever I'm buying be above those white dots. All right, next question is, I'll pick one stock there, Emanu. What is my viewpoint on Goldman? I don't right now, and you mentioned Goldman and Qualcomm, neither one of those are in groups that I necessarily want to be very bullish in, probably XLF more so than SMH. And then is Goldman the one that I would focus on within the financials? And it actually is not. What I would focus on in terms of the long side of financials would be predominantly Berkshire Hathaway, Visa, MasterCard, if you like the name, and maybe Chubb, if the liquidity is there. A next tier down would be things like JP Morgan or American Express. So notice I'm focusing on those names weighted within financials that have at least a green or yellow candle, no red. So Bank of America is a no thank you. Wells is a no thank you. Same with Goldman, same with Merrill, same with Citi. So find the relative outperformer there. All right, next up is taking a peek at what's going on in, let's see. Yeah, Rick, some of these names, especially like the Kava name. So if you go back and look at where Kava's weighted, you're going to see there's no weighting in the S&P, no weighting in the NAS, no weighting in the Dow. I don't believe it's even weighted in the Russell, even though it is a small cap. So yeah, some of these names, if you're wondering, can a name kind of do its own thing? The more untethered it is to the broader averages, the more likely it can be, right? The more likely it can be. And that's the way I would look at anything where if you're saying to yourself, Rog, if September is going to be heavy in terms of the broader averages, would it behoove me to look at either outperforming sectors? That's an easy decision, right? Staples, real estate, utilities, healthcare, consumer discretionary are your top 5, or find names that have no weighting in the indices. And Kava obviously would be an interesting one. Question on healthcare, XLV. Healthcare is one of the stronger sectors. You'll see it's still green. You'll also see that it's a top 5. And then if I take a look at the stocks weighted within healthcare in a meaningful way, meaning specifically the top 11 names in healthcare, as far as the best strength there, Johnson & Johnson's probably my favorite, followed by Abbott. And you might say, why those two names? They're actually low cost enough where some folks might actually be comfortable buying shares. The options chain on Johnson & Johnson is very liquid, and it's actually pretty scalable in terms of cost per option, as opposed to, say, UNH, which would be kind of spendy. And if things like cost per option and the scalability or the formula of risk, I just want to give everyone a heads up because we're right on the precipice of, I'll be doing a webinar on September 24th. I'm going to walk you through the August trades. I think August is a really interesting month because it was probably one of the most chaotic months of the year. And how did we do in the mastery? How did I manage risk? How did I position size? How did I pick what to trade to come out of that month ahead, right? This was not a negative month for us. So a lot of that goes back to the formula around risk, the formula around position sizing, and even what are we going to trade, which is kind of the conversation here, right? What is it that I want to focus on that has the highest probability of follow through? So as always, gang, thank you so much for joining me for Top Tier Outlook. I'll see you tomorrow for Charts and Coffee at 9 a.m. We'll see where the broader averages are sitting at that point in the morning, and whether or not we're going to see a bounce from Friday's sell-off or not. It's never about prediction, gang. I don't know what this is going to be. And newsflash, nobody does either. Nobody else does either. But what we want to remember is look at the previous session cash close. Look at where Friday closed. Staying above that keeps us in the bullish hemisphere. If we trip down below that, it's probably going to be a little bit more bearish. So for something like the S&P, keeping an eye on 54.03 3/4, that's going to be a big deal. We want to start to see price accelerate north of that level. All right. Be good to each other, gang. I'll see you tomorrow morning at 9 a.m.